you've been to the grocery store lately, filled up your gas tank, or tried to pay a monthly bill, you've probably felt it. Something isn't right. Prices feel heavier, your paycheck feels lighter, and the dollar in your pocket doesn't stretch as far as it used to. This isn't just your imagination. It's part of a bigger financial shift that could impact your entire future. Right now, across America, families are quietly adjusting their budgets. They're cutting back on restaurant visits. They're skipping vacations. They're delaying big purchases. And many are asking the same question: why does it feel like money just doesn't go as far anymore? Now, former President Donald Trump is stepping into the conversation, making strong statements about the direction of the US dollar. His message is stirring debate, raising concerns, and sparking headlines across the financial world. And whether you support him or not, what he's saying could directly affect your savings, your retirement, and the cost of everyday life. Because when the dollar weakens, everything around you starts to shift. Imported goods get more expensive, gas prices can rise, interest rates and investments start behaving differently. And suddenly, the financial plans you made last year don't feel as secure anymore. This isn't just about politics. It's about purchasing power. It's about your family's future. And it's about understanding what could be coming next before it hits your bank account. What does a falling dollar actually mean? When people hear that the dollar is falling, it can sound like a technical Wall Street kind of issue. But in reality, it's something that touches nearly every part of your life. A falling dollar means the US currency is losing value compared to other currencies around the world. Think of it this way: if the dollar becomes weaker, it takes more dollars to buy the same things. That could mean higher prices on imported products, electronics, clothing, fuel, and even food. The change doesn't always happen overnight, but over time, it adds pressure to your household budget. A weaker dollar can also affect your savings. If the value of money goes down, the purchasing power of what you've saved could shrink. That retirement fund you've been building for years might not stretch as far in the future as you expected. On the other hand, some industries benefit. American exports can become cheaper for other countries to buy, which may help certain businesses. But for everyday families, the most noticeable effect is usually higher prices and tighter budgets. This is why the strength of the dollar is such a big deal. It's not just a number on a financial chart. It's a reflection of the country's economic health and your personal financial stability. What Trump is saying about the dollar. Donald Trump has been outspoken about the direction of the US dollar and the broader economy. In recent remarks, he has suggested that the dollar's strength, or lack of it, could become a major issue for Americans in the near future. He has warned that certain policies, spending decisions, and global economic shifts could weaken the dollar over time. According to his statements, this could lead to rising prices, pressure on savings, and a more uncertain financial future for working families. Trump's comments have sparked strong reactions. Supporters argue that he's highlighting real concerns about inflation, debt, and global competition. Critics, on the other hand, say the situation is more complex and that currency movements are influenced by many factors, not just political decisions. But regardless of where you stand politically, one thing is clear. When a major political figure talks about the dollar losing strength, people pay attention. Markets listen, investors react, and everyday Americans start wondering what it means for their own finances. Because when leaders start talking about the dollar's future, it usually means something bigger is happening behind the scenes. Why the dollar's strength matters to you. You might not follow currency markets. You might not watch financial news every day, but the strength of the dollar quietly affects nearly every purchase you make. When the dollar is strong, it can help keep prices stable. Imported goods are cheaper, travel abroad is more affordable, and inflation pressure can be lower. But when the dollar weakens, the opposite can happen. Fuel costs can rise because oil is traded globally. Electronics and cars may become more expensive. Even groceries can be affected, especially items that rely on imported ingredients or transportation costs. For retirees and people on fixed incomes, a weaker dollar can be especially painful. Their income stays the same, but prices keep climbing. That means every month becomes a balancing act between bills, groceries, and medical costs. For younger families, it can mean delaying big life goals, buying a home, saving for college, or starting a business. The ripple effects of a weaker dollar can reach every corner of your financial life. The role of inflation and interest rates. One of the biggest factors behind a falling dollar is inflation. When prices rise quickly, the purchasing power of the dollar drops, and that creates a cycle that can be hard to break. The Federal Reserve tries to control inflation by adjusting interest rates. When inflation is high, the Fed often raises rates to slow down spending and borrowing. But higher rates can also create new challenges, like more expensive mortgages, car loans, and credit card payments. This creates a delicate balancing act. If rates stay high for too long, economic growth can slow. But if rates are cut too quickly, inflation can surge again, putting more pressure on the dollar. Trump and other political figures often weigh in on these decisions, arguing about whether the Fed's policies are helping or hurting American families. And those debates can influence market expectations, investor behavior, and even the strength of the dollar itself. Global competition and the dollar's future. The US dollar has long been the world's dominant currency. It's used in international trade, held by central banks, and trusted by investors around the globe. But that position isn't guaranteed forever. Countries like China and groups of emerging economies have been exploring ways to reduce their reliance on the dollar. Some have talked about trading in their own currencies or creating new financial systems that bypass the US dollar altogether. If these efforts gain traction, demand for the dollar could weaken over time. And when demand drops, value often follows. Trump has pointed to these global shifts as potential threats to the dollar's dominance. He has argued that strong economic policies and trade strategies are needed to protect the dollar's status in the world. For everyday Americans, this might sound distant or abstract, but if the dollar loses its global strength, the effects could show up in higher prices, slower growth, and more financial uncertainty at home. How a weaker dollar could affect your savings. Imagine you've spent years building a savings account or retirement fund. You've made sacrifices, skipped luxuries, and planned carefully for the future. Now imagine that the value of those savings slowly erodes because the dollar buys less each year. That's one of the biggest concerns with a falling dollar. Even if your account balance looks the same, what that money can actually buy could shrink over time. For retirees, this can be especially alarming. Medical costs, housing, and everyday expenses tend to rise with inflation. If the dollar weakens, those costs can climb even faster. For workers still building their savings, it means needing to invest wisely, stay informed, and adjust financial plans as conditions change. What worked 5 years ago may not be enough in today's economy. This is why so many experts stress the importance of understanding currency trends. Because your savings don't just depend on how much you earn, they depend on how strong your money remains over time. What happens to prices? When the dollar falls, one of the most immediate effects of a weaker dollar is rising prices. And this isn't just theory. It's something many Americans have already felt. When the dollar weakens, imports become more expensive. That includes everything from smartphones and appliances to clothing and cars. Businesses often pass those higher costs on to consumers. Energy prices can also be affected. Since oil is priced globally, a weaker dollar can mean higher fuel costs at the pump. And when fuel costs rise, transportation costs rise too, which can push up the price of groceries and other essentials. Suddenly, everyday life becomes more expensive. The same paycheck covers less. The same budget feels tighter, and families have to make harder financial choices. This is why talk about the dollar's strength isn't just for economists or investors. It's about what you pay at the checkout line, what you pay at the gas station, and what's left at the end of the month. What you can do to protect your money. While you can't control the global economy or political decisions, there are steps you can take to protect your finances. First, stay informed. Understanding economic trends helps you make smarter decisions about spending, saving, and investing. Second, consider diversifying your savings and investments. Putting all your money in one place can be risky in uncertain economic times. A balanced financial plan can help you weather changes in the dollar's value. Third, focus on reducing high-interest debt. If interest rates remain elevated, debt can become a heavier burden on your budget. And finally, build an emergency fund. Having a financial cushion can provide peace of mind when prices rise or economic conditions shift unexpectedly. These steps won't stop the dollar from rising or falling, but they can help you stay more secure, no matter what happens. The national debt and the pressure on the dollar. There's another piece of this story that often stays in the background, but it plays a huge role in the value of the dollar, and that's the national debt. The United States now carries tens of trillions of dollars in federal debt, and that number keeps climbing. For many Americans, it sounds like an abstract figure. But behind that number is a real pressure on the strength of the currency you use every day. When a country borrows heavily, it has to issue more bonds to finance that debt. Investors around the world buy those bonds, and as long as they trust the U.S. economy, the system works. But if confidence starts to weaken, those investors may demand higher interest rates or look elsewhere. That creates a ripple effect. Higher interest payments mean the government has to spend more just to service its debt, and that can lead to more borrowing, more money creation, and potentially more pressure on the dollar. Trump has often pointed to government spending and debt levels as long-term threats to economic stability. His message has been that a nation drowning in debt risks weakening its currency over time. For your household, this isn't just a national issue. Rising debt can influence taxes, inflation, and interest rates. It can affect mortgage costs, credit card rates, and even job opportunities if economic growth slows. So when you hear about the national debt climbing higher, remember this. It's not just a number in Washington. It's a factor that could shape the strength of your dollar and the cost of your everyday life. How investors react. When the dollar slips. When the dollar begins to weaken, investors around the world don't just sit still, they start moving their money. And those movements can shape markets, retirement accounts, and even job growth. Large investors, pension funds, and international institutions often shift their money into assets they believe will hold value better than cash. That could mean gold, real estate, commodities, or foreign currencies. When this happens on a large scale, it can push prices higher in those areas. For example, gold prices often rise when the dollar falls. That's because investors see gold as a store of value. The same can happen with other hard assets like oil or property. But here's the part that affects you. These shifts can create volatility in the stock market. Retirement accounts tied to stocks may swing up and down more dramatically, and that uncertainty can make it harder for businesses to plan, invest, and hire. Trump's statements about the dollar have often been followed closely by investors because markets react not only to economic data, but also to political signals. Even a single comment about currency strength can move markets in real time. And when markets move, your 401k, your pension, or your investment account may move with them. The impact on jobs and wages. A weaker dollar doesn't just affect prices and savings. It can also shape the job market and the size of your paycheck. In some industries, a weaker dollar can actually help. American exports become cheaper for other countries to buy, which can boost manufacturing and certain sectors of the economy. That can lead to more jobs in those areas. But at the same time, higher costs for imported materials and goods can squeeze businesses. Companies that rely on foreign parts or products may face rising expenses. And when costs rise, businesses sometimes respond by freezing hiring, cutting hours, or slowing wage increases. For working families, this can create a difficult situation. Prices go up, but paychecks don't keep pace. That's when the pressure really starts to build. Trump has often emphasized bringing manufacturing back to the U.S. as a way to counter these challenges. His argument has been that stronger domestic production can reduce reliance on imports and support the dollar's strength. But the reality is complex. Currency movements affect different industries in different ways, and the final impact depends on how businesses, workers, and policymakers respond. So now we come to the question on everyone's mind. What happens next? Will the dollar continue to weaken? Will policies change direction? Will global forces reshape the financial landscape? These are the questions investors, economists, and political leaders are all trying to answer. Trump's warnings have added urgency to the conversation. He's made it clear that he believes the dollar's strength should be a national priority. But the future of the currency will depend on many factors: government spending, Federal Reserve policies, global trade, and economic growth. For everyday Americans, the most important thing is preparation. The future of the dollar may be uncertain, but your financial awareness doesn't have to be. Stay informed. Watch how prices, rates, and policies evolve. Adjust your plans when necessary. And remember that economic shifts don't just happen on Wall Street. They happen in your home, at your kitchen table, and inside your wallet. Because the truth is simple: when the dollar moves, your life moves with it. And the people who pay attention today are the ones who'll be ready for tomorrow.